Hello everyone, hope everyone is well. Welcome to our first live, well, members only live. This is something we're going to be doing on a regular basis. So, as you know already, we will be releasing a topic um, and then spending 2 weeks on that topic. And then at the end of the second week, we will release the new topic. But in between that, we'll be essentially running lives to answer any questions in general, but also to just put focus on whatever that topical topic was. So, as you all know, this week for the next 2 weeks, for the past 2 weeks, we've been focusing on OBs. So yeah, that's what we're gonna kind of focus on today. So we haven't got anything lined up to show you, but we're hoping that you guys have got questions, and through those questions we can kind of dive into the charts. So there was two topics that we wanted to cover that are kind of non-chart related. Yeah, it is recording. Thanks. There's two topics we wanted to talk about. One, the first one, which was kind of going over our week one PDF document, which was the observation. And the second one was, which we'll dive into pretty quickly and move away from, but was about just to, I think, because we've obviously had a lot of people join since our kind of first initial videos where we've kind of mentioned about um, how we who we are and how we think of ourselves, um, but essentially just reminding everyone that for us we are traders first. So just to kind of set expectations when you guys are sending in questions and like response times and so on.
We won't be answering questions at the weekends.
Yeah,
just to let everyone know.
That I think
that's our chill time basically.
So
trading's quite a not stressful, but it's very full on. So obviously we just need time away from charts and time to recharge, and that's our weekend for us. So obviously just don't expect any replies during the weekend.
Yeah, like we'll definitely, if we have time to pick up, or we feel like we want to pick up any questions, then we will. But as I said earlier, we've mentioned it before in our earlier webinars, in our earlier videos, that we are traders first. We need to make sure that we're at our optimum, to be able to obviously provide value to you guys, and obviously just be good traders throughout the week, to be good examples to you guys as well. As you know, we only post trades that we take. We don't like posting analysis on things that we don't take, because essentially it's just you can mark up anything and post it. So for us to be at our top form, we need to make sure that obviously we're protecting ourselves and the time that we can keep available for ourselves. And yeah, that is the weekend. So we kind of, in the way we've set up our routine, is essentially every night we answer questions. So that's when you can always expect a reply. Of course, some days you might not get a reply because of the amount of messages that we have. As you know, for people that have sent in messages, we do have a conversation with you, and we are quite detailed. So just bear with us. We do want to get to everyone, but yeah, obviously people have been. We've had a few people mention about response times, but yeah, just if you didn't know that before, the weekends we kind of take off. So from Friday, we kind of start to kind of move away from
early finish.
Yeah,
Friday's an early finish.
We try to finish early on a Friday essentially, and get most of the admin stuff done. So then we can move into the weekend with pretty much a clear understanding of what our schedule is, which is essentially doing
more content stuff,
making content, like whatever it may be, going out, and we love the outdoors, so we're always going out. But yeah, anyway, I hope that's clear. It's not anything. It's not at anyone in particular. It's just trying to obviously to protect ourselves. We want to obviously give you guys the most value, but we need to be at our optimum to be able to feel like we're giving you guys that value. Yes. So yeah, I assume there's no questions on that. But obviously, if you do have any concerns about response times or anything like that, just let us know. And obviously, we'll make sure that we'll try to come back to you in a more timely manner. And then the second thing, which again is for new people or people that have been with us for a while, just, it could be a reminder for you guys, but we, when we set up NJAT, we really put a lot of thought into how we're going to
structure it.
Yeah, structure it. Like, essentially pass on the information in a way that we feel is understandable, and essentially is how we understood it, right? And that's what we that's what we know works because it works for us. So most of the things you see or anything we put out is, based on our experience and what worked for us. So one of the first documents we sent out was the week 1 observation, and some people I've spoken to it over the weeks and the months. Again, some newer members, some older members have skipped over that document, and although that document is not the kind of meat and potatoes of, hold on, it's an ad, someone. So although that's not the meat and potatoes of our content, it is still, it doesn't look like it when you look at the document, but the theory and the understanding behind that document is really important. So essentially, that document, what it describes is what observation is and how to observe, right? It's pretty basic, but obviously for those that don't understand, we wanted to put it into words.
It's a fundamental. It's literally fundamental. How we've built our understanding of how we trade. This is the first thing that we've done.
Yeah, observation. So it's this, and then from observation, we move on to hindsight, right? And then hindsight is talking about essentially marking up and marking up after a period of observation. And when we say hindsight, what we're talking about here is, you've watched something, let's say for an hour to 2 hours or over a session. That's what we recommend, right? Watch a session unfold in a 1 minute. So after that, after you've watched it live, it doesn't have to be every single minute, but you're viewing and following that price delivery over that time frame, often, you let it happen, and then after that 2 hours have been, allow 2 hours, another 2 hours or so to pass, right? Allow price to deliver after what you've seen, right? And then go back over what you've just witnessed, essentially. And this is what we mean by hindsight. So hindsight, what we want to do is essentially break down the chart, mark up the chart, and how we understand this picture to mean, right, to us. So if you see an initiation, you can mark, that this is a BFI initiation. This is, cause to create. I'll answer your questions in a moment. Is this cause? Was there a cause created to support this lower price? Do you get me? Did we see that happen beforehand, before this move happened? And you're starting to build this narrative and build this picture, and essentially marking up what you understand, right? And it may seem hard at first, or maybe even seem easy at first, too easy, but that's the process of the kind of the methodology or the understanding of how you're going to be thinking in the moment, right? These are all the points that you're gonna recognize price and be able to obviously take your risk at certain places. So once you kind of understood the price delivery and how price got from higher prices to lower prices, right? And you kind of understood and how price got there, then you want to look into what the best trades are, right, throughout that period. So based on your observation over that time, what are the best trades, right? Don't worry about how you would have got into them. Just where are the highs and lows? Where would the best place to be to get in based on whatever's happened. So if that's a high, if that's a low, whatever, if there's several highs, several lows, obviously just become aware of those places and then ask yourself, how could you have got involved, right? And then you're showing yourself. It might be an OB, you might find there's an unmitigated OB there. You might find there's, momentum shift and an initiation and a pull back into C for a mitigation and continuation. Like, obviously your entries can be different, but the point is now you're showing yourself where those entries are. So you've just gone through a process of understanding the price delivery that you've just witnessed, right? From a place of in the moment and in hindsight, right? So now you've gained the information from in the moment and now you've applied the hindsight. So now you have a good amount of knowledge and now you're looking at the trades, right? Now you're giving yourself good reasons for taking why these trades would have worked out, right? And that's it, job done. And then the next day you do the same thing, right? And this should be as standard as a trader. This should be this is part of the rule book essentially. You want to be marking up at the end of every day because it's through those periods, right, of marking up at the end of the day is where you're refining your skill and you're improving. If you're not doing that, right, again, that's fine. You're not gonna be a rubbish trader, or you're not gonna not succeed. But just understand that you're hindering your growth, your growth potential, right? And it's such a simple exercise once you have it under your belt, and it's a habitual routine. But this is why we talk about just trying to make it as enjoyable as possible, an enjoyable process, and understand that when you are marking up, this is your time, and your literally it's your time where you're improving, right? It's like almost reading a book, or that element of repetition every single day is where your skill is going to grow, right? You may think you're not doing anything, but trust me, this is where we started. And when we realized, we understood, it all came together perfectly because we had gone through the understanding and the narrative and the logic. We had gone through showing our eyes, basically training our eyes to see these things, right? And then the last thing we focused on was execution, right? And actually, how can we actually get into these trades? So that was literally the process for us, and that's why the first thing we put out was exactly how we got to the point we got to in a very short space of time, right? We're not brand new traders, obviously, but we are
relatively new smart money.
Yeah, we're relatively new smart money traders, right? But yeah, this is obviously, we're just trying to pass on how we grew. And remember, even when you're going through that process of marking up in hindsight, right, or looking at executions in hindsight, and you can have your focuses. You don't have to focus on everything. You don't even have to focus.
I was going to say that's the thing to do, is just to focus on one thing at a time. So like that was the idea of us doing 2 weeks for one subject, so you can literally just observe one thing at a time. So entries or OBs, for example, you're only focused on OBs for the week. You're just observing OBs for the week and how they're created. The reactions, where the reaction causes a follow through, where it doesn't. Just understanding these things over and over and over again is just building that subconscious skill.
It is important. It is literally where you're gonna. It's the daily routine. It's where you're gonna become the trader that you want to be through that daily practice. And again, it's not hard, right? But it's the repetition that is teaching your conscious, your subconscious, and then that's leading you to become confident in the moment, right? So when it comes, people say to us, I have difficulty executing it or finding the right trades. And it's like, well, have you been marking up in hindsight? Because you shouldn't be saying that. You should be saying, I know where to take the trades because I've been seeing where to take the trades for the past 2 weeks. This is literally how we got to take these entries.
Even in hindsight, just when you see an entry after it's happened, for example, just put the RR tool on as if you're actually in the trade, and then just follow it as if you're in the trade, because then you're teaching your subconscious to be in winners.
Yeah.
And to watch them play out as well. So that's something I did a lot when we went into entries, like really deep into entries. That's something I would do a lot. Is to just put the RR tool on where I know that there's going to be a trade even after it's happened, and just follow it along. That's how you build confidence with seeing big RR as well, especially if you come from somewhere where like a 5 to 6% is an amazing trade, and then going from like 10, 15, 20, 30% on a trade, you definitely got to teach that subconscious.
You got to again just be and it's remembering that it is all the skill. Like there's different elements to the skill, you know, that we like. An athlete, for instance, right? They've got arms and legs, right? They're not going to be exactly the same in terms of strength or performance. So there's several areas that we need to work on as traders to become, you know, that person in the moment to be able to execute, you know, with accuracy. And it's not we're not talking that something that's super hard to do because you have the information, you have the knowledge. Now we're just talking about how you become that trader, how you believe in yourself, how you gain that confidence, and it's through that document, observation. It's through observation that you're going to find all of your answers. You can ask us all the questions you want, but all the answers are on the charts, right? For the people that know that don't ask us questions. We're okay to. I mean, we don't mind answering questions, but I'm just trying to show you, like, for instance, Toby said to us the other day, you know, guys, I'm at the point now where I don't have any more questions. It's all about observation and showing myself, right? And that's the point you get to. Whereas there's no more questions anymore because it's all understood. It's just about teaching yourself to become better, right? To improve more and to, you know, be completely confident of your ability. And it doesn't stop because then you're trading for the rest of your life. Like, when does it stop? It doesn't, right? So this is a process that's going to be forever moving, forever growing. You're always going to go through that natural progression. So allow yourself to have these habits, as we're talking about marking up at the end of every day, to become, you know, your kind of core processes as a trader. Right? Again, this is what we do every day. Burton does not miss a beat. He marks up at the end of every day in a great amount of detail, more than I do personally.
That's literally just as well because I didn't do it for a certain period of time, and that's where I just really fucked up. I really started fucking up.
He noticed that he needed to, if he doesn't mark up the day, like if he doesn't mark up to like today's session before tomorrow, then he's out of sync for tomorrow.
Yeah, I know. If I mark up after the session, the next day that kind of creates the narrative as well, because now you know where all the unmitigated OBs are. So like, for example, last week, I think it was a Thursday markup. I think everyone on Friday was saying this is the Thursday OB from yesterday's video, and that's because you've seen not video from yesterday's markup, and that's literally just because you've seen it, so you know where it is now, so you've created that mental picture, so when price comes back down into this area, you know there's an OB there. So now you know there's this a potential reaction point. So
now you're watching current price
where
deliver,
all the liquidity is, and so on and so on.
Yeah,
you'll know it all without even looking at the chart. You don't even have to look at the chart now, but you know where price could potentially go to.
Yeah, and where to look at when you do come back to the charts. It's, like I said, this is what it becomes and to think as a trader, it doesn't sound foreign, does it? Like, this is, as traders, this is what we do. We should know where our pair is, and you know, I don't care about the price level. I couldn't care what the numbers say on the right, but in terms of price delivery and where we are within a range, I am well understood. And again, it's just from that daily repetition, and it's why we focus on one pair. You know, right. Anyway. So, point being, what we're saying, we're not telling you what to do. We're advising that if you haven't already, take a week. Toby is literally Toby can talk about this afterwards. But I remember we was talking to Toby. This is probably like over a month ago now. And he felt like, you know, something wasn't clicking. You know, he wasn't. You know, something was missing. And I just said to him, we both said to him, just take, you know, just observe. Just go through observation. Just have a week of observation. Don't worry about the trading. Don't worry about placing those trades. Yeah. Just follow the market.
It's crazy how different the mindset becomes as well. Yeah. Going into observation mode rather than thinking about placing a trade. It's a complete different mindset.
Like, he found his flow. Like, I know he's posting in the comments. It's probably the process. Yeah, we'll probably I'll read these out now actually, so people can hear them in the videos. But yeah, you know, like, even though I'm pointing out Toby, there's other people that have also been through the same process, right? Myself, you know, if I feel out of sync with the market, I literally tell myself, right, I'm going into observation mode and I'm just trying to observe and follow price and become understood of why price is moving the way it is, right? As traders, again, if you're trading for the rest of your life, it's perfectly fine not to trade today. It doesn't matter. It's perfectly fine not to trade today. You don't have to trade every day, especially the way we're trading. Obviously you can, but the point is when your account's up 4, 5, 6, 7, 100%, you know, are you going to sit there and still think about trading as much as you did at the first 100%? You know, everyone's different, of course, but yeah, you know, think of yourself as a trader, you know, both short term and long term. And you know, for me, observation is always going to be a part of my, you know, trading arsenal of what I have available to me to make sure that I'm at my best when I've, you know, got risk on the table. Right, right, yeah. So that's that. So yeah, observation, hindsight, marking up. It should be a daily task for you. If you're working, that's fine, right? Try and jump on your phone and follow the 1 minute every 5 minutes, every 10 minutes, every 15 minutes. It's not there isn't a minimum here. Just do what you can, right? Because that effort you're putting in that duration of time in that moment is where you're going to grow your skill, and you're going to thank yourself, you know, for those little 5 minutes or little 10 minutes or little 15 minutes looking at the charts at work, or, you know, on while you're out and about. When you come marking up at the end of the day, you're going to become more understood. It's not going to look foreign to you. You're going to say, oh, okay, when I last looked at price when it was here, look, price has moved from there to down here. So what happened, right? And then you start to build that. You're just naturally answering your own questions and becoming understood. But yeah, that's that. So let's quickly read these comments.
First one. How many focus topics do you guys plan to do? I mean, how many concepts have we got? So it's like
I think there was
6 or 7.
Yeah, 7. I think there's 7 in total.
Yeah, 6 or 7. It's basically all the concepts we use. So like price, delivery, cause, any smart money concepts.
Yeah, any smart money concepts
is what we're going to show.
We got a whole list somewhere. But another thing we're going to do is ask you guys what you'd want to focus on next. But maybe we might give some suggestions. But essentially, remember as well, we're always focusing on everything, right? It's what we're trying to do is break it down into manageable bites, manageable, spending a good amount of time on one thing. I think sometimes people just, you know, we literally spend
months on entries.
Yeah, we yeah, that's the truth. Like
only thinking about entries.
Only thinking about entries.
Months. Like we would get into trades and just be like, cool, it's done now. We're not even bothered about the profit.
Yeah,
we're just thinking about entries.
We
spent so long on it.
I remember that we used to take trades that they'll be up 100%, and we just wouldn't care. We just wouldn't care. So all we're focused on was the entry. Do you know what I mean? And all it done for us is we just knew that we knew what we was like. Again, you have to show yourself that it's real sometimes, and I think a lot of people forget that. You think you're just, once I learn it, that's it. But actually, you need to, you know, go through that, have that time, right? That, and not just a week, but actually a week where you're in a very balanced and understood mind, right? You know, a week in the charts of when you're in a place of understanding, right? And you know you're good, compared to a week in the charts where you don't have much of an understanding and you're not sure if you're good. It's completely different, right? It's very enjoyable when you know your skill. So we just want to try and get you guys there as quick as possible. So that's why we're breaking this kind of focus topic up like we are, because it's obviously how we learn.
Next one is, what is your process for marking up every day? Do you use replay mode and mark up as price moves, or do you just mark up points on the charts as it's presented historically? If so, does hindsight affect learning? So basically, you just know replay mode and just look at every reaction and see where it's reacted from. So like now will be on higher time frames because you'll have to obviously look left and zoom out, but it's about seeing where every single reaction is, because every reaction is just going to be an OB.
But start. So this it's as simple as this.
That's literally it. Just understand
before all of that, right? You wake up like it's this. You're waking up at 10 o'clock. I mean, hopefully earlier. don't follow us. Well, me, should I say? So you're waking up at 6 o'clock.
So busted.
Yeah, it's busted. Yeah,
I slipped out.
Yeah. A business owner, isn't it? So yeah, I've got a lot on my plate. Spreads most of that. You're waking up a bit early. Waking up at London Open. 6 o'clock hopefully, and you're observing the charts, right? It's simple as that. We wake up, we just look at the charts. You can go on, and do the things throughout your day. Just make sure you're looking at the charts, right? Let's say you've done that and you've spent, the last 4 hours looking at the chart, and now it's, let's say, 5 o'clock in the day, 5 p.m. and the sessions. So this is obviously, I'm talking from a UK time perspective, but obviously if you're not on UK time, then take the same approach. But what we're trying to do is we're trying to mark up at the end of the session. So 5 o'clock essentially, after 5 o'clock, because that's when most of the things have happened. Of course, something might be sent out for Asia, but at that point in time, we can probably gain a good understanding of what happened throughout London and New York. So what do? You've seen the price action throughout the day, so you're understood of what's happened, right? In terms of price has gone from this price point to this price point, and it's moved down 80 pips, and I saw it move 80 pips. You start on the left at the London Open, right? And you start on that candle, and then you start looking right. And you start to understand and build a picture on how price and why price is moving how it is. And how do we do this? Well, the concepts of obviously what we've spoken about, right? Yeah, so you don't have to, the why behind everything. You don't have to know it. You don't have to look at something and say, right, I know what that is, or I don't know what that is. You look through the charts and you find what you understand, and then you build on that. Every day you're looking to build in it. You're watching our videos. Okay, this is what cause looks like. Then you build in it, and you build in it, and you're building your understanding more and more and more every day. There is no wrong way of marking up. Of course, you can do wrong things, and that's why if you send us something and it's wrong, we'll let you know. But I mean, once you've watched our content, it's pretty straightforward, but you get the point. So this is the process. So you've watched it. Session has ended. You're starting back on the left to the start of the session, or whatever session you're looking to break down. Obviously, you might as well just do both sessions, right? Both London and New York. But obviously, if you're pressed for time, then obviously adjust it. At that point, you start marking up, and then you start annotating, you start drawing, you start putting boxes on, you start marking up OBs, you start saying, right, this is range and initiation, right, based on the footprint that was left, and this was cause built for this mitigation, and that mitigation caused price to move lower, right? That's the logic of what's happening, and how that looks. I can start marking at the OB, I can start marking about, look, we tapped 50%, and you start marking on, and then you just start, again, it's the element of building up, and then over time, when you come to mark up at the end of the day, you'll start picking up everything, and then it'll become familiar, and you become understood, and then you start focusing on entries, and then when you become understood on the entries, in the moment, you'll know when to place a trade. But yeah, sorry, it's probably long-winded.
Just every reaction point, any time the price has reacted off something, and it's caused some sort of reaction, just find out why it's reacted there and find out what it's reacted off as well. That's a very good thing to do.
Yeah.
Look at cause as well. Where is cause? Where's cause that hasn't been taken? Liquidity that hasn't been taken.
Cause that's been being built as well. Yeah. So as we see price move sideways.
It's everything. It's marking up is everything. The more you can mark up and the more you can understand about what you're seeing, the better you're going to become.
Is my water down there?
No, I'll grab you one now.
I'm sure I brought it in. I see it. I got it. My bad. Right, next one.
Hold on, there's one more in between there. It is any specific reason for choosing EU to be the pair you focus on. Just most time spent on that pair, to be honest.
Yeah,
we went it down from what was it? We had about 10 pairs at first, then 6 pairs. Then we went down to 3, which was GU, EU, and AU. Then went down to just EU and GU, and then just decided to just do EU.
Yeah, just the EU. Because, and for us, like this is like, look,
it works on everything though.
It works on everything. Don't worry about the pair. The pair does not fucking matter, right? Obviously, the benefit of you guys following EU is that we follow EU as well. So we'll always be able to, you know, best advise on a pair that we know well. Whereas for pairs that we don't trade, we can't obviously be as confident or as understood on that price delivery. So, but just remember that a lot of percentage can be gained on one pair, and it's not about the pair. It's really not about the pair. You know, it's got nothing to do. EU is not like our. It's not like we've gone through and tested all the pairs, and EU has been the most accurate and the most, you know, the best, you know, R to R return. It's just nothing like that. We've just naturally gone down to one pair because we like our time. And we don't want to spend our time flicking through 4 pairs. And it doesn't suit us.
As well, we can know what price is doing without looking at the chart.
Yeah.
Because we're so in sync with what we're looking at that it doesn't matter where we are. We can sit here and have a conversation about the chart and understand what's happening without even seeing it. So it's just you're very, very, very in sync with that one pair once you master it, essentially.
Yeah.
And there's so much RR on EU alone that. There doesn't need to be any other pairs. I mean, that's not saying you can't go and do other pairs. Go do whatever you want.
Go do whatever you want, literally.
For us, it's so much better because the lifestyle we want to create is something where we're always busy and doing something or traveling here, traveling there. So having one pair and just understanding that pair very, very well and making a great percentage on that pair just works for us.
It's more than
long
enough.
term.
And again, this is why you have to think about. We've been thinking of ourselves of traders for years. We've been planning it. We've been trying to understand what type of mindset we'll be in. And this is for the future, right? And this is the way we've naturally progressed now with one pair. It's fitting exactly what we've planned for the future. We want to be people that are up and about and traveling to places. We want to be gaining new experiences, meeting new people, interacting in different spaces, in different environments. And for us, if we're able to trade one pair and get a great outcome and a great return, our box is ticked. Job done. Now it's just about making sure we uphold and maintain that skill.
Yeah, when we're in our 50s and 60s, we'll probably take on a few more pairs.
50s and 60s. Yeah. It's all billionaire then. And, you know, not there if I'll be doing anything.
That's true.
You know?
My feet up
I'll be having my feet up. Someone will be rubbing my feet.
Yeah, we might take on more pairs, but no time soon because there's no need to.
If we was to take on more pairs, it will be a settling down trading type mindset, and that's not our mindset at the moment. We want to, and it's why it's
your kids will take the pairs.
Yeah, exactly. But I was going to say earlier about marking up. The reason why Burton catches a lot of Asian trades is because he's marking up at the end of the day. So he's naturally just following price up into his current place. So it's allowing him to then essentially he chills after the markup. We both chilling together in the evenings, and then he would just be on his phone waiting for trades to set up, taking what he knows. Right. So that's another benefit of marking up. It really is. If you don't do it now, it's something you definitely have to start doing, and don't just do it for a week. It's not about doing it for a week. It's something you should be doing every day. But I'm not telling you. I'm just advising.
Next question was, what's the idea behind premium and discount price theory? Is it just fib used on the range and 50% of that being the premium price area?
Ben's iPhone.
It's the theory behind premium and discount, just cheap and expensive. To put it most simply, is just cheap and expensive prices. So, I mean, kind of
well, yeah. And that's the disappointing. It's a disappointing competition like that.
At the top. There we go. Mute themselves anyway. Yeah, so bang on 50% will be equilibrium, so like fair price. Which is almost so like if premiums at the top, if prices hit 50%, it's hit premium. But it's equilibrium. It's the fair value of that whole price range. If that answers your question.
Yeah, I think just
high prices, low prices, exactly the same thing.
Yeah.
High prices and low prices.
It's where we're able to understand what is a cheap price and what is an expensive price and what is an average price. Of course, people are going to want to. If you're thinking about when people are buying and when people are selling, the average price is going to entice both sides. Right? So that's why 50% is normally where the dealings are happening. And that's why we see 50% get respected so much, because that's normally where orders are initiated between the high and the low. But yeah, as I said, mainly it's just for us to understand what is expensive price and what is cheap price. Chucks, can you share your screen and let us look at some charts for a better picture? Yeah, no, I will.
What did you guys learn from before? Who did you guys learn from before that let you down? Well, everyone. The truth.
Yeah, like honestly, listen, to talk about my journey, yeah, I've been doing it a bit longer than Burton, and I've been let down by absolutely everything. Anyone else? Well, not anyone I've spoken to, but it's before we started to get into these courses. I never used to take. I was against courses. Falcon was our first one. That was our first course essentially that we took. But before, I was in the markets for like 3 years before. Before at that point.
Yeah, I think we created that strategy.
Yeah, so we basically had a strategy that we created, that me and Burton created. That was, it was a good strategy. It was in a 4 hour. I mean, obviously it was never meant to happen. That's why we're at this point now. But we worked very well. Our best times in trading probably those times, wasn't it? In terms of like really finding something for like building our own thing and building our own understanding. So that was going well, and then we kind of hit some trouble in the live markets. So back testing, it was going great. We was hitting practically.
So why we back test now as well?
Yes, we've been burnt so many times from back testing. So we back tested, it was going well, and then it was, in the live markets, it wasn't really being represented as it did in back testing. So that we was fine with that. We was going to work on it until it worked, until we fix it to a place where it's consistent. But then I came across Falcon, and someone was talking about. At first, he didn't believe Mark when he was talking about these 40% trades, but now he does. Now he's been able to see it, and he basically made a post. So, yeah, that's when I first got introduced to Falcon.
We found the gold mine.
But yeah,
little
did we know that was going to be 2 years. It wasn't 2 years wasted, but it was 2 years being lied to. And yeah, then we went on to guerrilla trading, which I believe at first was, I don't know what happened, but I believe it worked at first. But then, after that it was pretty poor. And again, it wasn't for us. It's never that the strategy doesn't work. We're not bothered. We'll happily, refine it to the point that it does work. But when we're talking to the person that created the strategy and they're giving us wishy-washy answers, and we're asking why this happened, and they're not giving us the answer because, essentially they don't know themselves, we knew that, we no longer wanted any mentors, because, I just don't believe that meant that we're not mentors as well. We're not mentors. Me and Burton are traders. We're people who trade, and we're showing how we trade. We're not school teachers. I haven't got a teaching degree. I'm just someone that is passionate about, trading, and obviously I want to try to help people. But yeah, we've been let down in the past by just those two people. But yeah, before that everything was pretty shit. I've done baby pips. Yeah, I've done C traders. C trader had a course.
Everything you could think of. That is that retail tells you to do is what we've done.
Yeah, the amount of YouTube videos I've watched over the years is crazy. Yeah. I've got notes for, honestly.
It's crazy to go through Notion
Yeah.
and see all the notes,
See,
all the backtesting
Notion.
data is all on
we've got a Slack channel from what 2016.
It was a very long time ago.
Where that's got several.
It's got everything.
Yeah, parts of. Oh man, that Slack channel was a gold, man. We need to go back to that. But just point being is that we're just trying. Anyway, we're just talking. More questions. What's next?
Where did the bangers in the background go? They're still here, but they're low, so we can still chat.
Yeah. These are my questions. I understand price delivery and momentum shift. There are times, especially after the end of the age session, if I go short, so a minute shift in a 1 minute time frame to the downside, the price continues to move up instead of reversing. I'm thinking of waiting of a 5 minute or 50 minute breaks of structure to ensure price is intended to go down. Is there a better way to confirm price is going to reverse? How do you know that a momentum shift or reversal is not a price correction? I mean, we have answered this question. We have answered this question. Okay, sorry. Let me just quickly read this then, because it's a long one. Could you explain more about strong highs and lows and weak highs and lows? Yes. How do you manage a trade? Do you trail behind the 1 minute? It's got all the questions. You know what? These questions come from someone who's just like to the person that. I mean, I don't want to. Could you send them directly so not everyone can see? But yeah, I don't know how to. Like, these are questions that come from a lack of understanding.
Chuck the mercy.
Is that what someone said? I'm not trying to be. I'm only trying to say things that are. You know what? The best thing for us, right, is that the more people have joined NJAT, the more
common questions.
The more we've seen these common questions come through. But then we've also, because we've been going for some, a couple months now, we've also seen people grow. So we know that there's these people have asked this question to start with, and then they realise that these are not actual questions that actually matter. But I'm gonna answer answer these questions in the best way. So essentially, what he's asking first is, how does he know a momentum shift on a 1 minute is a real momentum shift? And if you look back in our structure, timeframes and structure document, structure and timeframes, PDF, we say on there a real 1 minute momentum shift will happen at a higher time frame point of interest, right? So what does this mean? This means that when we see a momentum shift on a 1 minute at a higher time frame point of interest, take the trade. If the trade reacts but doesn't follow through, you are not wrong. You've done nothing wrong. You've done exactly what you need to do. If you take that trade 10 times in a week, you'll probably make a lot of percentage. So don't let one trade or a couple of trades phase you when it's not at a real higher time frame point of interest. And what do we mean by higher time frame? Anything higher than the current time frame you're on. Yeah, so that's hopefully that answers that. So a real momentum shift on a 1 minute will happen at a higher time frame point of interest. That means there's a large range on the left. If it's not happening at a large range on the left, not a large as in duration of time, then it's probably not going to be real. If it's happening in the middle of a range, it's probably not going to be real. Right? If it's happening, I mean, this has to be said in context, but the general rule is that 1 minute momentum shifts, we want to play them when at higher time frame points of interest. Doesn't mean a 4 hour, doesn't mean a 1 hour. It can be a 15 minute, it can be a 5 minute. The point is, it needs to be at a higher time frame mitigation. And again, don't worry about price not continuing in that direction, right? All we just need to understand, first of all, is about getting into the trades and understanding how to enter in on a momentum shift. Then it's about understanding that higher time frame momentum shift, that higher time frame point of interest is what creates that momentum shift. It's the cause for it. So then we're following that continuation on a lower time frame. If on a lower time frame we react, we move down, but then we see price continue higher against us, then we can know that whatever was underneath us, whatever momentum shift was in the opposite direction of our trade, was probably the one that caused price to continue in that direction, right? Which you should also want to be in that trade as well. Hopefully that makes sense, but we'll go through it on the chart soon. Could you explain more about strong highs, highs and lows, and weak highs and lows? Yeah, just think about time frame. When you're thinking about strong highs and lows, think about time frame, right? The low's always going to start on the 1 minute, so we understand that. Then it's about how price reacts after that low has been created on the 1 minute, right? What price does. So, and where we are within a higher time frame, right? These are all the things that matter. But again, we'll go through this. But I mean, isn't this all in our structure and time frames document? But we will go through it. How do you manage a trade? Do you trail behind the 1 minute or the 5 minute structure? So I can tell by that, you just differentiate in the structures. You need to observe your time frames more. But do you have a target before you enter the market? If so, how do you determine a target and take profit? The best advice I can give you, right, and anyone about take profits, and I always reply the same thing, is focus on entries first. Don't worry about no take profits. Focus on consistently entering before you start thinking about take profits, because take profits this idea of take profit will change. If you're someone with a 300k FTMO account sitting on 50k, that you've made for that month, trust me, the way you made that 50k is going to be unique compared to someone else, because you're going to close. If you see a trade that's up 10k, right? How many people press close out of all the people that are in this right now? How many people are used to seeing 10k in their account? So your take profit is going to change based on your account balance. Believe me, as much as you don't want to think, it will change based on your emotions, and your psychology will change based. So for now, just focus on entries, right? And focus on paying yourself, right? Then over time, you will learn how and when you should hold trades, right? You can definitely make 5% a day, 6% a day, 7% a day with trading. You can close your trades early if you want to, right? Everyone's going to do it their own way, right? The easiest thing to do is find your take profit way with experience. That's what we said. That's what we've always said. Something I've always said to Burton: don't focus on take profits now. Let's naturally understand when we should and shouldn't be taking profits, right? And that's for us. We have our own unique way, right? Which isn't so straightforward, but we have multiple accounts. We hold on we hold on a particular account, and that hold that we've had could go from being up 20%. I mean, it won't, but being up 15% to being down 0 into break even.
Even saying that is, I don't partial out of my trades anymore, so I hold the full profit now for all of the trades that I take. So that's changed since
you first started. Yeah,
I would normally be taking partials, but as money started to come in, you're just like, well, cool, I'm hitting these 10, 15, 20, 30% trades every single week, near enough every single day. I might as well just hold these and take the full profit. So it's not a one size fits all. It's something that you'll take profit is something that you'll grow. But if you want something that's just like, I mean, I don't even want to say this because it's just, everyone will start to think of it as this, but the swing high is where you're looking at. And Chuck showed me this one as well. It's the most obvious place where price is going to go after a momentum shift is the swing high, because that on multiple time frames is going to be taken out that high now. And even on a continuation trade, if you've got a move up and then now you're inside that whole price range and you're looking at continuation, where's the first place it's going to target? It's going to be that swing high. So that's always the target. But yeah, again, it's based on personality.
Yeah, and essentially, like, the easiest thing to where we started with take profit was looking at the swing highs and lows. I noticed that when you get a real M1 momentum shift, i.e., it's at a higher time frame point of interest, price will aim to take out the closest swing point, the most obvious swing point. So that's how we've learned to be able to hold our trades essentially. But again, it's just a very personal thing. But again, focus on it once you've got the entries. Trust me, it's the easy taking profit is the easiest part. Obviously, you have to go through that FOMO stage of, you're up 4% and you really want to close it. But once you get used to being up 4%, you won't close it no more, right? It's just a process.
That's also, just to cut in real quick, that's also why we put the RR tool on when we was doing the hindsight in entries, so you can get used to seeing that profit all the time. You can get used to being in 1 to 10s and they're nothing anymore. 1 to 20s, they're nothing anymore. They don't phase you anymore. And it's going to be exactly the same when you're in profit as well on live trades. You're going to see them so many times now that you realise you don't need to partial out anymore. You can literally just follow the price because you can see cores is being built as it's being built in the moment. Price is always going to target liquidity. So if there's cores being built for higher prices and you're in a trade, it's always going to target them high prices. So you might as well hold. It's just, these simple things are what you'll gain through experience of just being in these trades over and over again and doing the hindsight. It's such simple observation and hindsight. It's such a simple thing, but it's so powerful.
Yeah.
It's literally
it's where we learn everything.
It is our fundamental of how we've got from 6 months ago not really understanding anything to now just being fully confident.
Surpassing people that have been doing this for
years.
For years. Well,
literally.
Yeah. Not from an ego place, but just to say that we know now that I said we get messages from all these Instagrams that people the people behind these Instagrams to say you guys are absolutely killing it. Get me? And we're humble. We pay our respects. Where did you? Sorry. The last question was how do you look? What do you look for when hedging? I mean, it's such questions. It's hard. A range. Always trying to trap a range. That's what I'm looking for.
Just high prices, low prices. If we're at high prices and you're in a trade long, but you've got a potential OB that's at the edge of structure, then why would you not want to take it?
Yeah, play the. Again, remember the hedge trade, right? If you're in a trade already, and you're up, let's say 5, 6, 7% or more, when you're taking a hedge trade, that's only a 1% loss. Like, listen, I will take that hedge trade without a doubt. I'm taking the hedge trade. Why not? It's literally zero risk. I'm down 1%. Okay, that's fine. I've just made 9, so I'm good.
That's what I normally hedging as well. If you're not super clear on direction, then take a hedge.
Yeah, take a hedge.
That's something I do a lot in market open. Sometimes there can be calls for higher and lower prices, for example. So I'll just take a hedge and I'll happily try and take a break even or even just a 1% loss, and then I'll be in the winner anyway. So
how would you know when you're ready to go live? Trust me, your brain will tell you. Your brain will tell you, because you'll be like, we're not just telling you from what we've learned. This is our experience as well, but from what we've heard from the members, right? Toby again, he can talk about it, but one thing I say is that the trades will present themselves, and that's what I'm talking about. You will know, because you would have seen it so many times. Right, I'm gonna quickly try to fly through this because we spent a lot of time talking. Burton will be rubbing your feet, literally. Luke, come closer to the Mac. Is he to the mic? Sorry. What does it mean when banks are pricing and repricing? I don't know. Do you know?
Literally,
I've not heard that before. I've definitely heard of. I don't think I've heard of. Yeah, no, I don't know.
Is that essentially that could be the guy that comes in the morning?
Oh man, we used to make a joke. We used to make a joke. Yeah, this is going to be the
high price.
The high price, because ICT talks about the high, that the daily high and the daily low has already been priced in.
Yeah.
So we used to joke about, used to be this guy used to come in the morning, come in beginning of the session and just come in, and price wouldn't move until he's set his high and low price for the day. But yeah, inside joke. Your psychology is bulletproof. Just like Toby's coffee. What, he's got bulletproof coffee, yeah? What? what defines your aha moment? That I assume you are always still learning and improving. Yeah, like, you know what, like, trading used to be for us. Like, and I remember I knew it wasn't real. I mean, I'll go on to explain. I knew that it wasn't the case, but for some reason I held on to it for so long. I used to think that trading would be this thing that once you get it, that's it, you're done. You know, finished, job done, no more learning. You've learned everything. You've learned how to trade double tops, double bottoms. Now you just, for the rest of your life, you're just trading double tops, double bottoms. When obviously that is not the case. You're always learning, and it took me I think it's when I went through Falcon, that's when the second year of Falcon, that's when I really learned that no matter what I do in my trading career, I'm always going to be at a point of learning. Like, the person that used to own Falcon used to say, always remain a student, always remain a student. And for me and Burton, that really hit home.
That's how we are in life, though. Yeah. Away from trading, that's how we are. We're just very progressive people. Like, I watched Zero's story the other day, and he said it plenty of times. Progression equals happiness, and that is definitely 100% for me personally. That is how I am. If I'm not progressing with something, I go into places I don't want to be in.
But yeah, you know, it's really just accepting that, you know what, it's not accepting, it's trusting that, you know, everything is going to plan out exactly how you want it. You just need to, gain the ability, essentially. I think that is the biggest aha moment, because from then you remain a student, and you're just always, trying to better yourself. And obviously, if you can better others at the same time, then, it only ends as a win-win.
That's what we got.
Yeah, how far are you down in the messages? Because I've got 41. I still haven't seen.
We've done most of these, I think.
Yeah. What comes when it comes to what's your best? Or when it comes to
using
premium discount, what's your best time frames to use? Or does time frames not matter? Should I just be? Yeah, like, I
can't say I really put a premium discount tool on. It's kind of just understood that we're at low prices or high prices now.
You can see it. Zoom out, like on your chart, like it's literally the process of just doing this.
Yeah, that's probably the easiest way to do it as well.
Just doing this, and you can see whether price is high or price is low. It's pretty just relative to this low and to this high. Right now, you can see between here and here, right? This is premium, this is discount. So it's just relative understanding where you are. So we know that if we're taking sales up here in premium, then we're selling into discount. This is good for us. If we're taking buys from down here and we're buying up from discount into premium,
like understanding these, understanding where we are on these higher time frames will help us to hold. So if we're taking a buy down in discount, we know we can probably hold that.
Exactly.
Because we're still bullish at the moment. So like overall on weekly, daily, we're still bullish. So.
And who cares about direction, really? Just.
I've been asleep since NJT started NJT, literally.
This morning was a great for hedges. I can tell. Right. Who's drawing? Toby.
Yeah, literally premium discount.
Yeah, thanks, Toby. He used to be in Falcon. Michael Bamba. Joking. Oh, it's recorded this as well. It's not good that we mentioned all these names. Oh no, I didn't have 41 mentions. I've reached the end. Yeah, it's I've been dreaming of mitigations and ranges, initiations.
When you're thinking about it that much,
it's
not
true.
A surprise.
It's true. We're the same. Honestly, like, we've been talking about the charts for years anyway, so it's very much like us. But now more than ever, we talk charts, and it's not like we don't talk trades. Like, we talk our understanding of the charts. Yeah, Toby is blindfolding.
Going through logic is just super important for us. Like, we all sit here and talk logic in trading for a very long time. I think that's the way to really understand something in detail, is to just go over it many times. And we might even see something in the live market, like see something within a range that we've spotted so many times now, for example, and then we're sharing that information, talking about it, discussing it, and that's how we're literally just building our understanding more.
And it's just going back, like, it's literally scrolling back in price and just seeing, you know, the first place I'm looking is the highs and lows. Between the highs and lows, like, what's happening, and, you know, what can we see happen, and, you know, why is price wanting to head lower? Like, what is this initiation of lower prices for, right? What, I mean, it's obvious what it's for. It's to come back and obviously fill something that was not filled, right? We can clearly see here we've got, you know,
a whole footprint, a whole sell to buy footprint,
a whole, you know, range initiation and that continuation of higher prices. So it's, you know, it's like, I couldn't care what price does here. Like, I couldn't care if I'm in a trade short, in a trade long. Honestly, I couldn't care. Like, what I care about is just seeing what price does there, right? Becoming understood, and, you know, do I understand what's happening? If I do, I can play a trade. It's that simple. I mean, I say it's that simple. I'm not trying to say it's you know, it's simple for everyone, but the idea of me thinking of myself as a trader is simple, right? This is what I want to do to become understood, and, you know. Can we chat about membership privately, Burton Chucks? Can we chat about membership privately? What does that mean? What do you mean by that?
Yeah, message us though, whatever that means.
Yeah, if it is to do with, like, yeah, private, I guess just message us. Once the corona stuff get over, we should do a meetup when everyone is a proper enough. Like, yeah, like, listen, if you're making money, yeah, and a lot of it, let us know. We'll definitely meet up with you. The meetups will be easy, but yeah, don't let Corona stop you. COVID. Is there any reason why?
Remember your masks as well if you'll come in.
Remember your masks.
Especially you, Toby.
Yeah, Toby's got masks for everyone.
Fuck off.
You jumped on.
Yeah, bro, come on.
Sorry if anyone's sensitive about COVID. It's just personal. The amount of time frames that I see on the screen. Yeah, this is me though. I like the detail. Is there any reason why the initial buy reaction today was not filled? Just curious. The buy reaction today was.
Oh yeah, it's probably where we, like, both me and Burton took.
Oh yeah, sorry, I wasn't on the charts. I wasn't trading today. Can you point out where it is, Toby?
Yes. I think if it's 5 minutes.
Membership chat. Cool. Oh yeah, let me just come off.
I think it was this one. Let me see in 1 minute.
I just don't see.
Yes, I got it. I think if you go into 1 minute, it's around 12:30 your time. Yeah, I think it was around this 12:30. Yeah, it's this one right here. And this was it. This was a reaction, break of structure. We're coming back. Reaction of the 50%.
Yeah.
We saw this, like, on the way back. I took this one right here, then stopped out. Someone took it here, I think.
Yeah. Hold on. So what's the question?
Is there any reason why that initial buy reaction today not fulfill? Not really sure.
And he's talking about this one. Whoever it is, they can draw on the screen as well. So, why can't I have the chat up at the same time? Let me put it on this screen. Yes, we're in.
12:35 candle.
12:35. Okay, this one, yeah. So, I mean, so the question, the one the first thing I wanna say is let me just read the question again specifically. Is there any reason why that initial buy reaction today not fulfilled? Just curious. So what you're saying is,
why didn't it follow through?
Yeah. Why didn't it? Yeah. Let me just get my tool up. So we had this momentum shift and this reaction take out this liquidity and essentially create, you know, equal highs, but mitigate out of, you know, this range initiation that we had. It was just another mitigation. But we noticed that when price comes up, right, what we're doing, we're reacting off the same point, but this, like, the answer is on the chart. That's what I'm trying to show here, right? The answer is in price delivery. This is where we can also always attain an answer. So let's just quickly look. Price comes up into sorry, I can talk a lot faster than I can draw, so let me catch up with myself. So this is what I understand when I'm looking at this type of price delivery, right? So I mean, this is the first time I'm looking at this, so this is in the moment, but just what I'm looking at is everything before this point.
Hold on. Is anyone waiting to come into Zoom?
Most likely.
I'll send that link.
Yeah, no, normally it comes up and says that someone wants to be admitted. But so essentially, so from this is I'm looking, essentially my eyes are not going past this blue line, so I'm not looking at any of this down here, right? So as prices is moving down and we're getting these reactions, I know that this zone here now has liquidity inside it, and a lot of liquidity. Why? Because we can see prices come up into it once, moved away, come up into it again and moved away. Now, if I'm looking at this long here, right, prices come up, moved into and reacted, right? So what we'd expect to see is that this reaction, right, is gonna what? What is price doing? So what do we expect this reaction to do? Prices reacted, taken this liquidity, moved back into the zone, and then reacted again, right? And look where it's come back to, all the way down to the low. That's fine, right? So that's fine. That's what's happened. So then now now we're looking past this, and we're looking back into the zone that we reacted from. So now let's look at the zone. So the same as what's happened above, right? We see we react from here. I'm just going to take the whole low, because obviously we see that we react. Obviously this low becomes weak. How do we know this low becomes weak? Because if you look, we don't break no swing highs here. There's no swing high that is broken in this move that moved higher. There's no swing low. So when this happens, right, and I see this reaction, think of what price has done. It's moved into high prices all the way back into the bottom of the range. Why? Because if we look over here, do we see price react and not come back? Why is price coming back this far down? Right. Well, we know why, because something was left unmitigated. Right. But what does this become? What do we see this becomes in the moment? Right. When we see this reaction. Right. It's very obvious.
Liquidity.
For me anyway. Say it again.
Liquidity.
Yeah, it becomes liquidity. So in the moment, right, it's quite simple. We're following price. We're following price. We're following price. Right. We see price coming back down. We're great. We've seen this momentum shift. We've seen that it's broken a previous, you know, structure point, and now we've moved higher. This is an initiation for higher prices, right? Now price comes back in. You've taken your risk, and our market's headed up, right? You're feeling great. And what do we see market do? React. No swing. There's no swing break here, right? There's no swing. The swing's up here. We just get a reaction, sideways movement, and then we drop. But it's clear why we're dropping, because we've just left all of this liquidity behind. This zone that was created here, this low that was created on purpose for it to become weak,
Yeah,
for it to be run.
That was literally just before 15-minute OB.
Yeah. Then my next
15-minute sell to buy. And essentially, one other thing I was going to say, because it's taken the low, taken the high, we know we're in a massive range. Another thing as well.
So now we've got a week high, week low. So understand what price has done when it's moved sideways. We've just built cores, right? Here, here, right? And we've built cores here, right? So price runs down. What do we know OB price delivery looks like, right? Price is moving, runs down, and we react, right? We can clearly see this is that run down, that react, right? Here, we get that same type of price delivery, right? And it's why I say, play this trade, play it, right? But don't be surprised when this happens. What you want to be is ready to take the next move, because you're understood of what this creates. You can take a loss, take a break even. It doesn't really matter, right? You know, you're playing what you see and you play it. Like I said, for me personally, it will be hard for me to take this long here because I know what this zone will become. I say I know. I'm not as in I know as in like I'm predicting the market, but just looking how price has reacted back in this area and how it's reacted away, I would assume that this intention is to target the swing low. And that's why I would rather wait for this to get run, especially when we're looking at in between the session here. Like, is this, we want the mitigation to happen in those high volume sessions, high volume parts of the day, and look where it's happening. So another reason. But yeah, the main thing I just wanted to show here is understanding that how one, price has built cores, right? Price has moved back into what we think is a momentum shift and initiation for higher prices. We are correct in looking at and reading that price delivery, but the intention for higher prices was, you know, at this OB, not from this momentum shift, which actually doesn't react off of anything. Right, so the answer's there.
I'll literally do a markup on this tonight as well.
Yeah.
Just to go into detail for what I saw.
Let me just take all this off my screen before I look up what's being said. Hope that's clear. It's, like I said, it's very in the moment, but I just wanted to, like I said, I've not looked at price today, so.
How would you have entered the buy that gave the true reaction? Well, for me, I wouldn't have entered that.
Yeah, you wouldn't have. So if you're looking at it, well,
that's literally trying to catch a bottom.
There's no need to get in here. I said you can, like, yeah. How do you catch this? A higher time frame, or like the way I see you catch these trades are higher time frame, and you're waiting for a reaction off of a higher time frame OB, and you've got your RR tool on, or your order waiting with a stop below the low, which obviously might be a big one. So that's how you catch that trade. But I mean, look at the price delivery.
And you can get better entries as well. Let's say the trade from the bottom, you might have a 4 pip stop. If you took a continuation, you might have like a 1.5 or a 2 pip stop. So it might even be better to just wait for that continuation and get in at a better price with a better stop, bigger R to R.
Yes. So let me quickly. So yeah. So that was the. You know, when you're saying things like, can you tell me why, or why do you think, right? Remember that why, that intention is going to be in the market. So how do we find that intention, you know, on the charts, right? Well, we look back, we look left, and we try to understand what is it that gave us that understanding of what is possible or what we might see happen, right? And of course, we're not going into mad detail here, but it's about looking left and trying to understand what's there and what will give cause for this mitigation. So as Burton is saying, there was a 15-minute, and even how I you know how I would have played this. I mean, I'll talk about after actually.
Just below that.
This one here.
Yeah, the one on the left.
This low.
Left.
This one here.
Yeah.
Yeah.
How convenient as well that is right next to where people would be looking for that support. Is it support if you're buying?
Yeah, support.
Yeah, where people would be looking for that support or that double bottom.
So this is that. So when we're looking, this is in between. This is where the liquidity is essentially stacked, right, below this low. For this mitigation here. Right. So this is our range. This is where our range in terms of we know liquidity sitting in this area for a mitigation, right? And obviously, OB somewhere. We'll go and look at it.
Just so wholesale to buy in 2 candles. Yeah, it's 2 candles.
Yeah, these 2. Right there. So you see that? Sorry, I keep looking in the wrong place. I'm using
basically, it mitigated this inside bar here, and then that's that sell to buy. That's the one, yeah.
Below there. So that's the inside bar, you're saying?
Yeah, that one there. That's the one. So that's that sell to buy delivery, mitigation, price never came back. So that's an unmitigated OB, that whole sell to buy delivery.
That's what price sets up for. So this is the low that I was watching, this one here. So a way that I found, and again, it's just understanding about when intentions can change, right, and when to look for that position in that direction. So like all I had on was this low, right? This first purple line was the low on the left that I essentially saw that price is aiming to take out that low. The intention for all of this price delivery right now was to take out this low, right? So this is what I was looking at, and I knew that after this, this is what I'm telling myself. After this is when I can look for any trades long, because if I try and take a long before this, I will likely be on the wrong side of the market. Why? Because the intention of this price delivery is to do what? It had shift, and what has price been doing? It's been aiming for a low, right? And where's our first significant low? Here. This is all liquidity, but we see that this low between this high and price has been moving inside, so I know after here I can just look for a simple momentum shift and take it based on the understanding that cause is probably going to want to shift after taking that low.
There's the aggression as well that was important to me here. After we got that momentum shift, we're seeing that aggressive move up. That's a massive sign of BFI higher prices right there. Especially
when you're seeing price deliver sideways like this, and then getting banged. You know what it's aiming for. So this is the first point. I know that when I'm holding this trade, I'm not thinking about closing it until at least it's taken the liquidity that looks most obvious, and I know what this zone creates. Right? It's created for future, something in the future. That something in the future is for it to be run. This high to be run. So when you're holding that trade, you're not touching it until it gets above here. But obviously, we'll see what this 15-minute reaction gives. It's pretty slow so far, but apparently it was a bank holiday today.
Yes, bank holiday. Yeah.
How would you enter the buy? Gave reaction. If you enter on the open, how could you tighten your stop loss instead of a big one? Is that, you're talking about this?
Yeah,
this one?
For the 15-minute mitigation.
Yeah, I need to go back and look at that all. Like I just don't try to play these. There's no point. I just take it afterwards.
I don't. I always wait for a momentum.
There's literally no need to try and catch a bottom in these days. Like sometimes it's not sometimes. It's just
Sharks is the one that does try and catch.
Yeah, like I would say, I sometimes I can catch him, but it's like I said, it's when it's most obvious. Like I said, for me, I just know that after this, I can look for a change of intention. So it's just, and again, it's just experience based.
Talking about that as well. This is something we spoke about before as well, about what do you prefer, reversals or continuations? Because I'm so much better at seeing continuation trades. Like near enough 90% or 99% of all the trades I take will be continuations. whereas Chucks does like to catch the bottoms, the tops and bottoms sometimes. So it's another personality thing.
Indeed. How long have we been going?
Feeling the Afro beats in the background, literally.
So let's quickly see how long this. It's okay, 14 pips. So, like, how would you? I just wouldn't. Like from time I've seen, you know, this. I just don't see why you would want to try and play this. I mean, if you want to, then you have to go back and look at that. But this
is literally something we used to do, is try and catch all of these sorts of trades, and that's where it will just be loss after loss after loss. Because the momentum, until you've had a momentum shift there, the momentum's still bearish.
Yeah. I just don't see how you can catch that trade personally. The only way, like I said, for me, the only way you're catching that trade is the only way to catch any trades at the top or bottom for me is on the 1 minute. Of course, you can mark it up on a higher time frame and wait for a lower time frame to get there and then take your entry, but the 1 minute's always going to show the entry. So where I'm more concerned about is once we have a reaction, right, then about getting in. And obviously, this is a potential place you could look to get in. And obviously, what do we know this creates as well? It's that unmitigated higher time frame price delivery. So the questions we used to ask was why does price move away without mitigating first? But then obviously, as we said in the OB video, what we noticed that this goes on to create a higher time frame OB. This price delivery that we know so well, this sell to buy, doesn't come back to get mitigated, right? Holds and then takes off, and this is how we're able to catch these trades here and not wait for this trade back because we've seen it so many times. We're not expecting price to get here, right? All the reasons are here. Price holds before the break in the high, pulls back. Now we can see what the purpose of that pullback was, right? Was to hold price. Cool, let's quickly make sure I'm looking at these questions. Make sense, run the play, but watch the play, observe, identify. Exactly. And this is, remember, who are you as a trader? Like, you are someone that is, only because you've missed a trade or you've taken a loss, does that mean that you should just walk away? Hell no. If you understand what's going on, look for that best entry. Of course, like, don't get me wrong. Some days you're gonna take more losses than you have to go through that process of taking those losses. It's how you become better.
The only time to walk away from the charts is when you're feeling emotional.
Yeah.
Because that's when you make silly mistakes. It's the only time I'll walk away from the chart is if I don't feel like I'm at my optimal. There's just no point in trading. I know that I'll make way more mistakes and I'll take way more losses. And it's just not worth it.
That's what we said. You just have to think about trading from a longevity standpoint, not this, I need to hurry up and do it now so I can make money. Otherwise, you'll forever be doing it.
That's all the other ones though. We've got some new questions.
I just thought I did a but clearly because we didn't take the swing high. The buy wasn't good buy. Market structure. It looked like it twice. I missed that in context. I guess the OB was played was wrong.
Admit again.
Trying to join in and everything. Any tips on how you can determine a swing high as opposed to a structural high? I get the theory behind it, but I can't easily see it. It's zooming out. So the first thing to think about is the first thing to think about when you're looking at swings are they are relative to the time frame you're looking on. So like if I'm looking at this chart right now, like the most obvious swing for me is going to be this one. Why? Because price moves above a high, right? Let's see, we're looking at sideways delivery here, so just looking at higher time frame range, but moves above this high, reacts and breaks the low. So now this is quite easily becomes this time frame swing, right? I mean, I would personally say here, but on a higher time frame, when you look at this price delivery, you realize that this is near enough the same low. There'll be one candle that does something like this, and then the next candle might look something like this, right? So even though we're looking at two lows here, and it is two lows on this time frame, on a higher time frame, it's just going to be one candle. So we can assume that this price delivery inside here isn't the main swing point, right? That's going to be a lower time frame swing, not the higher time frame swing. Does that make sense? Because you're looking from here to here, understanding that in between this, we've had price pull back above a high again and give us another swing type style place we're looking at, but this is happening, you know, within this price delivery. And then when we break, right, we don't sustain the break. We break, react. So it shows you that this is the swing high and this is the swing low, and this is that inside lower time frame swing point. Because why? Price moves up above and swang to break the low. So when we see this, this is the BOS that I'll be looking at, right? Before obviously the main swing high, but this is the price breaking. How else can I help with swing highs? Like, so swing points, of course, can be seen across time frames. So, for instance, you know, when we flick through our time frames, this isn't going to be a high. This is going to be inside a candle, right? But we're going to get to a point where this changes. The high changes where we can't see this high no more, and it changes to another high. What do I want to explain there? So when you're looking at time frames, you're essentially looking at duration of time spent at this particular price. When price moves away, right? What we're looking at, I mean, the easiest way to explain this is just literally flicking through the time frames, and it's why I have all these time frames on my chart, because it shows it the best. So we're looking at this high here, this blue line.
Zooming out's the most important.
Yeah,
it's the easiest way to see it.
It's the easiest way to see it is zooming out. Like I'm hoping everyone can see that
the moves away. Like in this whole down move on the left, just think about where price moved away. Where did it move away from? On the left.
This one.
Move, that whole from the top.
This one.
That whole move. Yeah, where price has moved away from. Where's it moved down from?
So here's another example of like. Let me again. I'm going to pick these two. So we're going to look here. I'm just going to delete everything else off my chart so you guys can. So we're looking here, and we're looking here. So tune this one there. So I'm going to do this pretty quickly. So I'm just going to flick through the main time frame. So we see these highs, right? On this time frame, these look like obvious swing highs that we would look at because of how price and what price has done in that area. We can see the swing, prices swung up above previous highs and then broke the low. And the same, we're seeing the same type of price delivery here. So 5 minute, still see that the highs, yeah, quite clearly. 15 minute, still see that the highs. 30 minute. Right, so look, we've gone through all these time frames and we can clearly still see these highs. Right, we randomly picked these highs on the 1 minute. Right, but we can see why we've picked these highs and why these become more structural points more than ever. Why? And now we're going to see how this one is different to this one, and we'll see. Watch. So 1 hour. So still quite obvious. What do we see now? We see that this is a high that's been created quite easily. This is a high that's reacted off of this range, right? So that's where we see that reaction. So that 1 minute swing up and move away, we can see is reacted off of this buy to sell price delivery that we have here. Quite simple. So now I go to the 4 hour. See, and what do you see? What changes? Do you notice that this high no more? this high is inside this 4-hour candle, but this high is the top of this 4-hour candle. And this is why I said, this is why I'll be looking at this swing point as the main structure to see price move higher, right? So we had a swing point on the 1 minute, now we've got a swing point on the 4-hour. This is what we want to see price break to show that intention for higher prices when we're talking about market structure. But yeah, so this is how we can see that this high here is not really the high that is the real swing point. Because once you get to a 4-hour, this high doesn't become a high anymore. It's inside this 4-hour. So we would probably want to say the high is here, but the same thing's going to happen, right? So quite clearly we can see, if I was to put it up here and go up to the 4-hour, right? Can you see how now we've got the high, the actual high point, and these highs in here are not actual highs.
The start of that move away as well.
And it's the start of the move away where we see that initiation, that range mitigate initiation, right? And this is why we talk about using your time frames. And when I say on my markup, look at this price delivery, but go through your time frames. This is what I mean. So start on a 5 minute, 6 minute, 7 minute, 8 minute, 9 minute. Listen, you're not trying to work out every single time frame. You're letting your mind recognize what that price delivery is on a higher time frame, because this is how I was able to see things like this. So when I'm looking on a lower time frame and I'm asking myself, is price likely to just fall out the sky from this point, right? Or a better thing is price now, has price, so for example, if price reacts off of here, like this, right, I'm not surprised thinking that a swing high has been broken, so we should see higher prices now. I understand that this is a pullback within this higher time frame swing for where we could see lower prices. Hope that makes sense. But yeah, it's why I wouldn't look at here for a significant move. Well, it's not about looking at here for a significant move, but if something gets broken in here, I'm not going, okay, we're going to see higher prices now. It's this one that needs to get broke. And again, if you do the same thing with this price delivery, but go to a higher time frame, what you're going to see that this is going to be the high, right? And this is going to be the low. Then if you do it again and go up even higher, then you're going to see that, something like this is going to be the high, right? And that high is going to be inside this price delivery, which then this becomes the high, right? And then look, we've just circled all of our swing points. Hope that makes sense. It's hard not hearing your feedback, if it does make sense there and then. But yeah, Kath, let me know if makes sense. So Burton, you mentioned you are a continuation trader. I think I'm falling into that myself. See, this anyway, association. Seeing a market shift kind of gives me a sense of security, but when see the reaction you look for at time. I mean, yeah, you can obviously answer that on Burton.
You mentioned you're a continuation trader, falling into that myself, seeing a momentum shift. It's the thing with continuations is everything's in your favour, because you've hit a higher time frame OB, you've had a momentum shift, so BFIs are initiating higher prices, for example, because you're seeing that aggression and that momentum shift, and now what you're doing, you're just waiting for that first bullish price delivery, that range initiation, cause created to mitigate and continue. It's a very easy way to trade because everything's on your side now. The BFIs can't be showing you anything more than they want higher prices at this stage if they've caused a momentum shift at a higher time from OB and now they're buying more. So it's easier to trade like that. Hold on, there might be a little bit more, but so when you see a reaction, you then look at the higher time frame to see what it reacted from, and then like normally I'll already have the reaction points in there, so I'll already have the unmitigated OBs in there ready. So when it does react, I already know what it's reacting from. like we said earlier, we watch one pair, so we know where the unmitigated OBs are. So when we do get a reaction from that, and we've had a momentum shift, now we're just looking at higher prices. So you've got to think of it simply. We're either BFIs are either initiating higher prices or lower prices. That's it. And now you're just looking at any evidence to show your higher prices, for example, and that was today's trade. Look at a higher time frame to see. But yeah, I have done that as well, where prices just reacted, and I'm going to a higher time frame to see where it's reacted, and why it's reacted from there, and then built a trade idea straight off that.
Yeah.
So that's why again it's just doing that markups at the end of the day and seeing where prices reacted from and finding out why is going to help you in the moment, because if you haven't got that marked up, and now you see that momentum shift, you see that aggression, and you're going back onto the higher time frames. Where's this reacted from? Cool. Well, we've reacted from a higher time frame OB, and we've seen a momentum shift. So if you've missed anything from the bottom, now it's just about seeing price delivery, which we talk about all the time, which I talk about in my markups all the time. That range, initiation, mitigation, continuation. You're just literally watching for that, and it's such a simple way to trade because it's the same process over and over again.
It's simple again. Simple in a way that is, once you understand it, it's simple. Yeah. It's a very repetitive process to follow.
Do you always wait for momentum shift before catching any potential reversals? Yes, I do. When I hear that question, what I hear is someone trying to build a process for a trade entry. And that is the wrong thing to do. You do not need anything to be confirmed before you enter a trade, right? What you need is your mind to say, yes, I can place a trade now. That's it. That is it. That is what you want to work on, right? If you're hindsighting at the end of every day, you're going to see how you get into trades, right? As in, you're going to see how you personally get into trades. And that's what you want to focus on. Don't worry about... obviously worry about what Burton does, but he's talking from a perspective. Even though he can give you the word answer, he's gone through the understanding to get to the point he's got to. So you want to do the same thing, and hindsight will show you what type of trader you are. But obviously you have the answer. Burton said he does wait. I'm just trying to. Like, association is the slowest way to progress as a trader. It's going to stop you from that. I mean, you're probably going to go on to say this now, but it's going to stop you from learning by... This is literally what I've done with my other two, with Falcon, and what I've done with when I was in Gorilla, is create a trading plan too quick. Like, I'm looking at this is my trading plan, now I'm just going to continue to backtest this and learn and understand this way of trading, but you're just stopping yourself from seeing so much more. So that's basically what Chucks is saying there. You just don't limit yourself by thinking you know before you've actually observed yourself and found out.
It's like saying, oh, because Burton does that, I'm going to do that. And that's what we try to do with previous mentors, and it does not work. It does not work. I'm saving you time, trust me. That's why hindsight is your best.
We also both don't have a trading plan. Yeah, so another thing as well. We don't trade based off if-then rules. This, if this 1, 2, 3 thing happens, then I'm this. It's the same process as in I wait for momentum shifts at higher time from POI, but then it's about just really observing the market as it's moving and understanding, because you can't. I mean, you can create a trading plan for this, and this, but it stops your fluidity, and that's literally where you're really understanding.
Yeah, honestly, I haven't made a trading plan since.
I don't have a trading plan. I have a whole page of information, logic. I just have a page of logic.
If you understand it, you don't need no like. I don't even know what I'd put in. I mean, I did. To be fair, I did create a plan. I did have a trading plan at the beginning. Yeah.
But your plan was not this. It was questions to ask yourself in the moment. Yeah. That's what the plan was.
I'll try and let me get it up for those.
Hold on, I'll send it. I'll find it. I'll let you send it.
I think a few people have seen it, but...
Oh, you got it?
Yeah. What's it in? I forgot what I put it in.
I'll have a look now.
Trading dashboard. Oh, here, I got it. Smart money trading strategy. Honestly, when I did this,
there's lots of questions.
Yeah, I'll show you. I'll put it on the
It's
screen.
crazy
now.
because everything in there is subconscious now in terms of all the questions and the why and so on and so on.
Yeah, how do I navigate to it? Where is it? Here we go. So I think probably Toby's the only one that's seen this in here, I think.
Everyone's gonna be print screening this now.
Yeah.
Don't print screen
this. This is, I do not, this is stuff, I haven't looked at this in a long time. It's definitely good information, but it's uncompleted. I think there's a more up-to-date one actually down here somewhere. But this, you know, I'm just gonna scroll through it. It's repetitive information, but you know, people always want to see trading plans, and you know, when we used to ask our old mentors, they'll be like, "No, you can't see my trading plan. It's personal to me."
Trading is very personal. It's all based on your experience. So even though there's a lot of stuff in here that will definitely help people, just seeing it, it's very much you have to tailor it to you, and that's what's so important in trading. Everything has to be based on you and your personality.
Like all this was in here before we started posting on NJAT Instagram.
Yeah,
like
this
is early days indeed. But I'll carry on scrolling.
I remember seeing you doing this thinking, shit, I've got to start making my trading plan.
I remember starting, it didn't stop. I just kept adding and adding and adding. And I was like, how am I going to remember all of this?
What my old trading plans used to be, just adding and changing.
I just read it every morning.
The same information, but changing the words.
Yeah. And look, this is where I stopped. This is literally when I stopped. This is when I started to focus on trade entry. I felt like I understood everything. I was asking myself the right questions. In the moment, I was, you know, understood, and then it was this basically I was trying to, just basically work on our entries. Yeah, it was like, is this trade taken from swing structure, so I could start to understand what trade I was in, whether I was in a swing trade or an intraday trade. Is a reversal or continue? Obviously. Yeah, obviously, is this the trade I'll take again now? Psychology stuff. Has price confirmed with BOS from its POI mitigation showing that price wants to drive it much? Yeah, all this stuff. Yeah, this is memories. I mean, it's memory. It wasn't that long ago, but you know, then I kind of updated it to this because it was too big, basically. Then yeah, this is what I used to tick off every morning. I remember this. This is what I updated it to. I used to read through this, tick it off, just to know what I was, you know, essentially know what my job was to do every day when I turned up at the market. All the things we kind of learnt from places, but yeah, that's it, people. What's in here? Probably shouldn't even show this on camera. Oh yeah, remember this one?
It's on the gram.
Yeah, this one was the Instagram. This was a big day for me when I posted this.
It's crazy because we had it from so early because we understood this price delivery from so early. Mm-hmm. So just building on that price delivery.
This is. But you shouldn't go through that. But you shouldn't go that far. But yeah, this is basically all the stuff that I just started. So after I was at this point, this is when I started to essentially what people are saying. People saying
sort of WWA
cheeky. It's only I just like the name. I just like to write the name. It's all the stuff I picked up from their Instagram. But yeah, when was like watching ICT videos and was kind of seeing that same understanding of that price delivery.
The ICT, no, not ICT, the RC webinars. I'll just show a bit of that as well.
What's some of our notes?
All the understanding. This is basically our whole understanding. I mean, this is Chuck's one. I've literally got the same, just in all different on my notes for the same thing. But hold on, let's see if it's in there. Yeah, there it is, right at the top.
You guys want to see this? I'm screaming. I rinsed there 3 sessions. Yeah, look, listen, we're people for the information. So what do I need to find? What are we finding next?
It's on
The RC
same on
notes.
precision entry, right at the top, RC webinar index.
What, inside the
Top,
notes? Oh yeah, up here, yeah. And then what in?
Yeah. Drop down. Yeah, you got it.
This one, yeah.
I think it's like webinars October to May.
So yeah, so this is basically all everything. Bloody hell. Always clicking one. Like all our notes. Like print screens, everything. It's everything. Jumping into that trades he had taken. Like it's really trying to understand like this, and this is when we didn't know. This is when we literally when we didn't know. Of course, there's all free information we found online, available to the public.
Thanks to those people.
Yes.
It's a leaks, cough, cough.
Leaks. I don't know what a leak is. What's a leak? Like from your tap or something. When you get a leaky tap. Yeah, you know. Anyway, we just you know. I don't know really what we're showing you, to be fair, but
even stuff like that is just. It's crazy to think.
Yeah.
Understand how the understanding's grown.
Yeah,
from
grown
seeing
since
that
these
picture
times.
before to seeing it now.
Like when we was doing this, I promise you, we were so confused. We didn't know anything. Oh man, it was struggles. But well, I personally knew that we was going to understand. It was just about giving it time. But yeah, you know, all the wick-off stuff that we've probably would never go into. Yeah, look at that. Remember that? Imagine I found that comment.
Once you can truly see this, it's over.
It's over. Talking about the way of trading.
Yeah.
I remember when he said that. That was powerful. He basically says that, you know, once you can truly see this way of trading, it's over. As in, you know, you're basically about to kill the markets now. And that's a very, very true comment right there. Once you do see it, it's just a matter of time. Right, let's get back to these questions. What time are we on? 2 hours and 9 minutes. Cool. Right, let's just
Like, to answer Sarah's question, were there any books that you really found helpful to build your understanding, or was it online? For me, it was a PDF that I read. That basically everything from that PDF we've already put, well, our own understanding now we put into the PDFs that you've seen. But that was like it was
essentially someone.
That information was so important.
It was seeing someone else talk about what we've seen. It's that that document was big for you.
That PDF.
Yeah, it was, to be fair. It was.
I felt the shift as I was reading it.
I'd read it. It was a PDF that Zero posted, and I basically searched for a lot of hours to find that PDF. But again, all the information in it has you guys seen already. Books, but yeah, trading wise, none. Obviously, self-help books are the one we recommend is with winning.
Winning in mind.
Trading's all about essentially what we learn after. Was it after? No, it was during Gorilla, wasn't it? Because JB recommended to us. Recommended it to you
after a string of losses.
Yeah, after that string of losses. We got recommended. Well, Burton got recommended this book called "With Winning in Mind," which probably all Gorilla people know about already. But it's a good book for building. You know, for really understanding what as an athlete. Yeah, I loved it. Yeah, I mean, yeah, you already know. Yeah, if you don't know about that book, just read it. Read it. It's all that book is purely for you and your self progression, and it's very to the point. It's a small book, so if you're not much of a reader and you want to get into reading, with Winning in Mind, I forgot.
I think it's like a couple of grand on Amazon, isn't it?
Is it actually a couple of grand?
I mean, there is one seller. There's one
seller. What is his name?
What's the author?
Sarah.
Bassam, I think.
Yeah, I cannot pronounce it.
Have a look.
It's a decent presentation on that book. Yeah. Was we in when he done that? I think he was. Yeah, that's his name. That's it, Lanny Basham. Yeah. Tell me I'll get it for free tomorrow. I've got a copy. Can I sell it for 2K? Yeah, no. I remember when you told me someone was selling it for
On
like
Amazon.
the actual the physical book. Have I got the physical? Yeah. No, I got the Kindle book. Have you got the physical book then? Kindle as well. Yeah, I think you can't buy the physical book. I think that's what it is. You know that documentary that
Money Masters.
No, not that one. The one that Toby sent us the other day.
Started watching it.
Yeah, have you?
No, I'm very intrigued.
Yeah, but the books, the list of books that he's recommended, I'm gonna start reading them. They're all the ones we know of, but the ones I haven't heard, definitely gonna get into reading again. Yeah, I think. Oh, is that okay? My bad. I thought it was called With Winning in Mind. But yeah, winning in mind is.
Does anyone watch that Money Masters documentary as well? It's a good question to find out who's seen that.
If you haven't, well, we know someone that has, but yeah, if you haven't, yeah, With Winning in Mind, yeah, still watching it. Yeah, it's a long one. Halfway through. What's your thoughts? What's your thoughts? Every night, a couple of minutes. In 2021, you still be watching it. So it is a long one. I've not watched it yet personally. I probably won't watch it because Burton's got all the information. But
I've literally got I wrote everything.
Yeah, Burton's got all the notes for it as well.
All the notes.
A lot of notes on that as well. But yeah, really interesting. Exactly, and that's what it should be. It should be something that piques your interest. And again, we want to become knowledgeable for now and the future, because when you obviously do start to gain wealth and grow your wealth, you want to just at least be understood of the type of environment that your wealth is in, and those that type of documentary is gonna I'm no expert, so when it comes to wealth, so don't I'm still learning myself, but yeah, all this information is good. It's good to have. Naughty. Biggest ROD today. What's that ROD? ROI. Yeah, no, I've said for GU. Well, I mean, what does that mean? In a week? Yeah. So I mean, it wasn't even a week. It was just my biggest one is in a day, over 200% on GU in a day. Yeah, that was the day everything clicked for me. That was I didn't need to be. I was falsely believing in myself before that day, and that day I actually did. Boy, I'll let you guess. But yeah, that was a good day. I think it's from that day, isn't it? But I think it's gone up.
Yeah, I remember it.
Yeah,
there's been so many points, big points in this journey of smart money, where it's just things have clicked, and they've been, compared to other strategies, they've been such big turning points in this one.
Because it's actually real. It actually bloody works. Trading should just work, no? But yeah, no, this information just works. Do you have some days that things click? Of course. And this is what we mean by we're athletes, right? An athlete is not gonna have. I was literally talking to this about Burton the other day. If you can remember, if I said anything more, Burton, but as an athlete, you're gonna have good days. You're gonna have bad days. You're gonna have absolutely wicked days and absolutely good days, right? But there's going to be we know and we can assume there's going to be a variation, right? It's not one box is ticked and all of a sudden you're this crazy trader now. No, it's something that is obtained over time, and you're going to turn up at the charts different depending on how you woke up, how your day ended yesterday. All of these things do matter. So yeah, some days, of course, are going to click more than others. And obviously, based on price delivery, some price delivery is more straightforward than others. So,
Exactly. When it makes sense, trade.
Exactly.
When it doesn't make sense, just observe.
Yeah, observe. That's literally our rule. Yeah, I have days where I feel like I'm in the zone, and we was talking about.
These are actually great self-awareness things, because knowing that you're not in the zone is knowing that you don't want to risk. Because you'll start to see, like, if you're not in the zone and let's say, for example, you start taking a couple trades and you keep losing every time you're not in the zone, then you just know not to trade when you're not in the zone. It's literally as simple as that. It's just understanding yourself is why trading is such a big, understanding yourself thing, because the better you understand yourself, now you can step away from these moments where you'd normally be taking losses over obviously being in mindsets you don't want to be in.
And if you wasn't, if you didn't know that before, you do now, right? There's like, I think I was guilty with thinking that trading is going to be like this one-shot stop, that once I get it, that's it. But it's not. And I don't care. It doesn't need to be as well. Like, we're overthinking. We're trying to become perfectionists.
It's wanting to know the answers because you don't like being in the unknown.
Your current position in life. That's what it comes down to. Like, you want to change your life, and you can't right now, and you think that you need to know now in order for that. But no, like, it is.
Oh, my bad. I was on a whole different wave.
It is. Yeah, well. We'll let that wave be. We'll let that wave go for both of us. The point is just this is what I personally think. All these mentors have created this type of like this imaginary idea of what a trader is. A trader's fucking anyone, right? Do you understand what you're doing, and can you click buy or sell? Yes, you can. Then do whatever you need to do in your day, right? Who you are today and who you are in your life today is going to be different from who you are in your life when you're, making 10k. If you've got, let's say you get to the point, right? You're at 3 FTMOs, 100k. That's everyone's, dream to get to. Obviously, that's just one part of the process. Once you get the 300k FTMO count, you have to manage yourself. You have to learn to manage. Yeah.
Never made before.
What are you gonna do? See your account up 25k, and what? You're just gonna be like, oh yeah, I'm a great trader. I do this professionally, so that's. Of course, I'm up 25k. No, you have to get used to it. I promise you now, you have to get used to seeing £25,000 in front of you, without saying what. And the other thing is, looking at being up 25k and then seeing it go back down to 0.
And dealing with that.
It's a real thing.
You literally got to deal with both sides in trading. It's a very, what's the word? Like high pressure environment because of dealing with both sides.
It's not a joke. And it's not we're not saying bad things. We're not saying anything. I did a 15k FTMO profit down to blood. Yeah, I can. Good times. I know the pain, and the thing is, it starts with the only reason why that's pain is because you don't know when it's going to come back again, and that's the beauty with trading. The way we're trading now is we are not phased about seeing trades run from plus 25k back down to 0, because you know what, tomorrow I'll probably make that again. And the next day I'll probably make that again and again and again. And you know what? That has been the case for months now. So I don't worry about, how much money there is anymore. Well, I'm not saying I'm completely, detached, because I'm not. It still is very new. It's very real, but I'm just trying to say it does take some getting used to. So expect it. And it's normal, it's good, it's enjoyable. I like finding out what it's like to see those types of things and be a part of those experiences. It's interesting. I get to learn more about myself. But you all go through it, and it's all normal. If you think about you as, if you're up over 100k and you take a 1% loss, are you bothered? I can't, maybe some people might be, some people still might be. It's very, I can see it, but you're up 100k. What's a 1% loss matter? Even 4 losses. Listen, you can't be. That's not going to knock my confidence. I'm up 100k. So yeah, what's how many people still got in? Hope you've been able to take some value. Anything that's like well, two questions actually. What is like a, I guess most people are probably going to say entries, but again, it's going to come with experience. But what do you feel like you're missing? Like, if we was to focus on a topic next, what would you want to kind of see more and hear more about? Oh yeah, there was a question about inefficiency somewhere. Continuation trades. Yeah, profit taking. I mean, just might just honestly, it
price
comes.
delivery is one we was thinking of doing next.
Yeah.
So.
Like profit taking is like, I could literally sit here and talk to you how we focused on profit taking from a very like broad perspective, i.e. we have certain accounts that do certain things. One account we can do one thing on, the other account we can do another thing on. It's that simple. One account we pay ourselves often, one account we pay ourselves from swings, from holding. So just think of take profit more as a what are you happy with? Do you get me? So and again, when you're thinking about take profits, it's just aim, understand. I had the questions in my trading plan, but one, you want to understand where did you get in? Where are you? Where is your trade within price? So if I've got into a trade on a 1 minute, and for example, latest price action, yeah. If I've got into a trade on a 1 minute, like here, for instance, right? I've got into this trade and I'm holding this trade long. Is this a swing trade? Would you class this as a swing trade? Versus if I got into the market here or here. If you go into the market here and it does this, right? What is this trade? Do you close this trade here? Do you hold this trade here? Do you take partials on this trade? Right? See how it changes, right? It has to be an understanding of where you are and what type of, again, it's based on experience. That's all I can say. Because the way I handle and manage my trade here is going to be different to how I handle and manage my trade here. It's that simple. So I'm not saying that there's no answer to your question or there's the content. I mean, are we going to do content on profit taking? I feel like it'll be, we might do, but it will be right at the end. Because trust me, it's way more important to get into the trades and gain experience being in the trades than it is just thinking about taking profit from a loose, like from a place that's not in context from the trade that you're in. But remember, the most important thing is to pay yourself. If you get out of a trade at 5R that goes on to make 30R, you've made 5R. Why? There's nothing to be upset about. Like, go and speak to 100 other traders, see if they've been able to do 5R today. They probably won't. But you will get better over time. Yeah, price delivery, profit taking, understanding the range properly. I mean,
we'll do one on ranges though, because we can do one on sideways range and price range. In two different.
Yeah, because remember we was going to do ranges as a separate topic, but then we thought we would.
We'll probably go into it in price delivery.
It would make sense in price delivery. Yeah, that'll probably get covered in price delivery then. A lot of stuff will get covered in price delivery actually.
Mid-net as well.
Will you start giving markups on the Telegram group tomorrow? Yes, we'll also send you the last week's ones as well. And the PDFs.
How do you know lows are protected by BFIs? Any strong high or low is not going to get taken. So we've seen it that many times now that we just know it's protected. they're not going to want their positions to go in drawdown. So,
and again, zoom out. This is one thing we've said in the structure and PDF document is when you're looking at higher time frame highs and lows, right? So let's say, for instance, it's pretty shit price delivery to talk about this. Like, so when you're seeing like price react like this, right? And these lows being created like this, right? You want to know what that price delivery looks like. Trust me, you want to know. Because look at what these are. These are higher time frame highs and lows being created, and pricing moves substantially. That word. Substantially. Right? As in, that means to me that that is a big trade, like based on what I could catch for an RR, right? Up and down, right? And we know that these highs, they're not going to be protected forever, but do you see how they're protected for a duration of time, right? This is when we want to understand that the trade is not going to run forever, but there's going to be a duration of time that this high is protected, and that's when we want to be shorting. Right? When there's been a change of intention, right? We understand now that this high is no longer protected because price is going. It's liquidity, right? And how do we know all of this information? If we don't know it in the moment, right? We're going to know it after. So if you don't know what's happening down here, we're going to know what's happening once we've obviously broken that high and that this is actually weak. Then we can look back in hindsight and say, okay, this is what I can understand based on this price delivery. And obviously it's what I've drawn in this range into this mitigation, break it higher, and obviously we see that is just sideways price action to support a mitigation for that higher time frame continuation. But yeah, you want to know what price delivery looks like at highs and lows. That's gonna be able to show you what a true momentum shift looks like as well. And not just about the one, but what they can look like, right? And then obviously how price moves away. How do you observe? That's a mad question from Hem. Continue. How do you catch a wave once you've missed it? Follow the OBs, mitigations. It's the easiest way.
Or if there's none of that, and it's just a straight move up or move down, wait for the next range.
Yeah, as today, down here. So you can see like once we've moved away, right? Prices. You can see prices moving now, and just remember. Let's think about what's happening here, right? Don't just look here, right, and not understand what's happening down here, right? If this is a reaction at a higher time frame point of interest, right? Intentions are now bullish. So you're taking trades that are following a narrative. You're likely going to be on the right side, right? So when you're now looking at trades, you're understanding that you don't need to wait for this. To take what opportunities you see to play the longs based on your understanding here. So only because you understand, don't mean you have to wait for this. Play whatever you can see. You don't have to get it right the first time. Just do it until you start to understand what's happening. Because the way price is moving away here is not uncommon. It's very common, right? Because what have we explained before? Price will move away and not come back to mitigate at C because it wants to create a higher time frame point of interest. And that's where we see price sustain the move away, right? But we know what's down here because we can see on the 1 minute we've left, price has been left unmitigated, right? So mitigation, price has not mitigated from out of this mitigation. And what do we see price do? I mean, it's very slow today, but because there's no volume, not much volume in the markets, but price is moving away, right? So when you're looking at these continuation trades, you're waiting for that range. If you've not got into this trade, well, now you have that move away, right? Price comes back in, right? Can you get into this? Price moves away, price comes back in. Can you get into this, right? Can you get into these as price is moving away? And this is where we want to. It's not about just catching this. It's being understood that you really have your intention built from down here. Now you're just trying to play a continuation, following the intention for higher prices, right? If you've gotten in here, right, and then price moves up and you've taken a loss, that's fine, because look where you are within the move, right? Right, you know, you're at the top end of it. But at the same time, you could enter that trade and see this happen, and price could fly to the upside. So what's more important, understanding how to get into the trade or understanding how to be in the right trade? For me, first is understanding how to be in the fucking trade in the first place, right? Because then I can understand next whether this was the trade to hold or this was the trade to close, and I can learn through experience, and I'm happy to do that. I'm more than happy to do that, because my trading career is not a week or a month, it's a lifetime.
After you though. Next one.
Trade management, different swing trades, quick in and out. Yeah, definitely. And again, experience is going to show you that. But a good tip to understand about trade management and difference between swing trades and in and out trades is just zooming at the chart and looking where your trade is in within what you see. And you're going to know, again, if you're in a trade and you're looking at now that this, you know, let's say this is a 4-hour candle and you've gotten in here, right? And then we've just closed here, right? It's probably a pretty good trade you've just gotten into, right? So again, it's just again, using your time frames to show you, and again, gaining it through experience. Because imbalance is easy to understand all on YouTube. Yeah, we just don't really think about. We just see inefficiency as pretty much the same thing now. Just cause. How do you observe? Just by looking at the charts. Right? We're looking at the charts with no bias. We just want to see what happens and understand it. Yeah, taking profit. Yeah. You know, multiple people have asked us about taking profit, and our answer is always the same. First, figure out how to get into the trades, and then learn from experience. If you can pay yourself 5% today, you're a happy man. But tomorrow, you will definitely be holding on to the 30%, because you're going to see it happen so many times, and then you're going to, again, in the moment, you're going to know when you should hold, because you've seen it. But obviously, liar places such as equal highs. Exactly. So so where liquidity is stacked is a good place to take profit, because that's where cause can come in for the other direction. Nope. Yeah. I forgot what I even asked. Forgot to ask the question. But how do you know lows are? Okay. Yeah. Good stuff. Thanks. The second circle from the reversal. Did you not see this still in premium prices? When did he ask that? What time is it? 10 minutes ago, sorry. The second circle up from the reversal. Up here. Maybe. Did you not see this still in
you erased it.
Oh, sorry man, sorry. Understanding if price initiates from range, how do you know price will react properly instead of powering through? But yeah, so like a good listen, it's a good question. Obviously, yeah, never mind, but just to quickly answer it for everyone else, like, how do you know whether a zone is going to get wiped or not? Oh, sorry. Didn't have enough space on my mouse pad. Right, price is coming down, right? If price is doing this, yeah, you probably know what's going to happen, right? What can we see? We can see reaction, right? Move away, reaction, and we're not getting no follow-throughs, right? We're not getting no swing breaks of structure. So every time this moves up and pulls back, we can expect that this low is probably about to get taken pretty soon.
Yeah, liquidity,
right? Because we've got liquidity stacking. So when we're seeing multiple reactions, right, at a point, so let's say we got an OB right here. This is OB. Price moves away, comes back in, and does something like this, right? We probably know what's going to happen because this becomes a reaction point with no follow through, no swing break of structure. So we can kind of, with confidence, know that this has just been, this is essentially, yeah, it's cause being created. Like, especially when you're seeing something like this. So prices reacted underneath this. We've got an actual mitigation and we still don't get a break of the swing high, right? So now we know that, again, this zone becomes a likely area that when price approaches this area again, it's likely to be wiped. And again, it's based on what's happening left, but this is all with the narrative that we're not seeing any. We can see initiation, but we're not seeing no major. So what we're saying here is that price has reacted and not caused anything. There's been no significant cause of breaks of structures. Maybe on a 1 minute, but when we're looking at our swing, right, between the high and the low, right, you may have all of these that get broken, but there's been no significant break, right? And again, when you're looking at this momentum in this leg, more than likely it's going to be slow, right? It's going to be a slow move away. It's going to show that it's building cause as it's moving from that sideways delivery. And again, it's building the same thing. So it's understand that this OB, after it gets tapped and respected, if it doesn't go on to create anything, then we probably know that it's going to get run. Just like the example I gave, well, this one here, for instance. Right, we can see that this is built cause. We can see what happened. Price gets run, and then this one down here. Again, quite simply, we see price react and then not give anything, and then as price starts to pull back into this zone, again, we can understand what it might create. Especially as Burton's saying that there is cause for price to move lower. So, of course, it's giving. We're stacking all of these things in our favor, understanding that price is naturally just going to want to take out the low. Yeah, I mean, what else is there to talk about?
2 hours and 40 minutes.
Yeah, we did say it was going to be 2 hours, so we've gone over 40 minutes.
And then 6-hour live streams again.
Yeah, that live stream the other day was crazy. Time just seemed to fly by.
Do you guys like these live streams as well?
Yeah, what's your
Instagram
thoughts?
Ones?
What's your thoughts on these lives? What's your thoughts in general as well? Just feel free to give any feedback. Feel free to give any feedback. We like both negative and positive comments. We can learn from both. Yeah, more than welcome. More than welcome. Like, and it's more lives, yeah, insightful. We're doing this all for you guys as well. Just understand, this is our way of giving back to something we love, and we feel that we've always felt that everyone should be able to, know that they have the ability to trade. We've recommended it to all of our friends, people we've met, people I've worked with all the time, and I've always wanted to help from that sense. So that's why I've always shared the information about trading. So this for us is this, again, we're just able to just give back and, just be honest. That's the main thing. There's so many dishonest people in this industry. I just don't get it. What's the point? There's no reason. It's like we're all doing the same thing. We're all trying to, improve our net worth, essentially. Yeah, and live is going to be every 2 weeks. Yeah, every other week, basically.
We'll kind of do it as just like a recap of the past 2 weeks of the focus for that last 2 weeks, and then just go over any questions, go over any chart, just basically the same as what we've done now. to just go over any questions that you've got. We can obviously go live, anyone can talk. It's a chill environment. We're just...
It's literally meant to be for you guys.
Exactly.
Yeah. Again, it was Toby's recommendation. In fact, Toby, is he still in?
Twice.
Yeah, come on, Toby, talk up. Let's hear some more from you. What's your thoughts, Toby? How is your... I mean, obviously, you've probably already spoken to people, but...
Yeah, quite a lot.
How's your career gone so far? And how can you give back?
Well, I wanted to add on the what you were talking about previously about like how much it takes and how key observation is. Okay. So for me, I remember that, and I remember that call we had that night. And then after that, I said like, okay, from tomorrow on, I'm gonna really like, I called it like an identity shift, as I like it to call, but it's literally just saying, okay, I'm gonna observe during a session, no putting anything on my chart, wait for that to happen, and then at the end, see what plays out. And of course, when I started this process, I thought it would take like, because you feel like you're not doing much observing and you want to trade, enter the market, you feel like you're missing out on something. But then I told myself the limit of like 2 weeks. And after already like 3 days, 4 days, I felt like,
I remember.
You remember that it was like, bro, it's literally like 3 days and I'm a different trader, like completely different. Even if I had all the information already before. It's just that I really applied observing. And then, for example, like live trading, it comes also, like you remember when I was like struggling to go live or not and that, but then at a certain point you like see something 1 time, 2 times, 5 times, 10 times, 20 times. And then you're like, just, bro, I'm going to enter the market. With no doubt, for example, like today's trade that I took a loss on, like I'm more than happy to take that, and I'm more than happy to learn from the loss.
Exactly, and so do you feel like it's enjoyable for you now?
It is, especially because you're not wondering anymore if the trade goes your direction or not, because you build the whole story behind it. So I'm happy because my story is right, let's say, or like my narrative was right, instead of just focusing on, for example, like a 10%. Okay, yeah, of course it's nice, but they will come. And I think in price, like for example, today's price action, okay, but in other days, like in every day, actually, there's the possibility to be doing like 10%, 20, 30, 50, 100 if you want. There's a lot of opportunities all day.
That's for sure. Do you think it was because I remember before, because you was trading and then you kind of stopped, and then you went into like you wanted to go back into the observation. So do you think you found like it beneficial by coming out of that trading type of...
Yes, it is. I think and a lot of members can relate to this, because I suggested a lot of members to do that, even if it sounds like kind of, you're really like, it sounds that it's something that will, it's like taking 5 steps back, but it's actually taking like 2 steps forward.
Like for a beginner.
It's crazy.
It's like what beginners do. I'm not a beginner. I don't need to do that. I already know what the market looks like and how it moves, right? It's that, it's just that, and it's just remembering it. When I think of that, it's always remain a student, because we don't know what we don't know, and
exactly.
As traders, we just need to make sure we're in a space where we always want to know. We should be inquisitive to want to understand and find out, and again, not from a place of emotion. I think that's one thing we talked about a lot, Toby, of like allowing yourself to grow without the emotional. Of course you need them, because the emotions get you there, but in terms of like, it doesn't, the growth doesn't have to be significant. It could just you could just see it as natural progression and as the part of the process as a trader, rather than saying like making anything significant when it's happening, and making it over exerting yourself, and whether it's a win or whether it's a loss, and just knowing that, reminding yourself that you do have the ability.
And that's a big point. That's a big point, because I think another like big step in my trading is when you really know, like you saw this through observation, you saw it so many times. It's now up to you to make yourself believe that you know, okay? Because you're still approaching the mind, like the market, with the mindset you had in your subconscious that is like, I'm not sure about this, I'm not sure about that. But now you actually are sure. Is that like your old story keeps coming up, okay? So you need to change that because you actually know right now what's happening.
Exactly. And this is
literally like changing your belief, basically.
Yeah, literally. It's that self-image, right? It's the subconscious, and the belief is a real thing. Honestly, like we as humans we follow our beliefs. That's belief in what we think about water, about food, about driving sensibly, or following the laws. It's what we're doing is we're making a decision.
Laughing.
Some of us like to go maybe 10 to 20 miles over the speed limit. Some others would go 5 or 10 miles under the speed limit, and it's the difference between those two people is just belief, right?
True.
I'm not. I mean, it was only for joke purposes. But
yeah, of course. No, I do, of course. But yeah, I really like
belief
this.
Is a real thing. Do you get me? It is a real, and it's for everything in life. It's not just for trading. Do you believe that you are going to be financially independent in the future?
Exactly.
I've believed it. I've not believed it. Do you get me? I've believed it since I said it. I've got my goals that I've put down years and years and years ago of wanting to own my entire week. Right?
Absolutely.
So I'm a type of person that I have strong belief in myself. I believe and trust, in the universe and how it's unfolding for me specifically. I don't hold, and I've had to learn this though. This hasn't been just, I haven't just become this person through my life. I've seen that things kind of have worked out for me. Not exactly how I wanted to, but as long as I have that belief in myself,
the universe orchestrated the events in the way that was right for you.
And people talk about miracles and stuff, but I think it's spoken about in it's not spoken about often enough, because miracles are happening to us all the time.
Exactly.
Yeah, I mean,
and one thing that I wanted to also like point out that helped me out in, especially like lately, is like setting yourself, and maybe for example you did it already, okay, so you've done it, maybe you're doing it still because you always do it, but having a routine, okay, like priming kind of your brain before hopping on the charts. And it could be different. It's like I have something and someone else can have something different. But like for me, for example, going for a run, then meditating, and then hopping on the charts with a clear mind helps a lot. And I notice the days that I don't do that, like my mind is kind of off on the charts. Okay, so and it's basically like teaching yourself discipline in multiple ways, because if you're disciplined in, for example, your morning routine, you're going to be disciplined also in other activities in your day. Okay, so you bring your habits in every habit, kind of. Okay,
definitely, I agree, and it's and this is why it's hard to become a trader, because I say hard, I'm not trying to set people up for failure, but I mean hard as in, prepare yourself for the journey, because, I learned very early on, and I used to say this to Burton all the time, mate, trading is so much like life. It's crazy. It's crazy how there's such a, they can cross over so well in about like in the terms of taking a loss and having a win and having good emotions and bad emotions. This is what we go through in life, and I just found that keeping a steady routine is what is gonna best ensure the consistency of your performance. Do you get me? And that's what we're trying to do. We're trying to set ourselves up so you're like, I can speak personally for myself about routine as, you got to look at yourself. You got to be aware of yourself, and you got to understand, right, when are you trading? When are you at your optimum in a general space? When what day of the week do I feel most alive and most energetic? When do I feel like going for a run, and when do I feel like not going for a run? And really understand from a non-judgment judgmental perspective of, you know, what you're thinking in that time, and then try to understand why. Because trading is something that you have to do with all of your mind, with all of your understanding, with all of your emotions, with all of your senses. And if you're, you know, if you don't know how you react to hostility or to sadness or happiness in life generally, where you can't anticipate your reactions, then in the charts, you know, you're gonna face the same, you know, you're gonna face problems essentially, because you don't know yourself as a trader, you know, with your, you know, and your set of processes. You know, having a strong routine, having strong habits is gonna, you know, cross over into your trading, and that's just fact. And that's why you have to think of yourself as a full package. You're an entrepreneur, you're an investor, you are an asset. I mean, and you know, how does an asset perform if they're not at their optimum, right? Most likely they're not performing. So it's great. It's good. It's good advice. It's good advice, Toby. So true.
It's literally like thinking about who I want to become. Okay, like the Toby I see in 5 years. What habits do I have? Like what disciplines do I have? And I start like, you know, I inverse engineer from there.
Definitely.
Some birds imbibing.
If there is no other questions, guys, we're literally going to call that a day from there.
Yeah, man. Like talking about morning routine. If I don't go to sleep.
Yeah, exactly. Definitely Toby's bedtime. Toby is very good at his routine.
Yeah.
He's very
no Asian trading for Toby.
He's very disciplined. Toby's a good person to follow.
Everyone is thanking in the chat. No, thank you guys for real.
Yeah. Thank you, Toby, as well, for getting involved. Just a big up to Toby in general, actually, because he does tell us that he speaks to a lot of you guys. So thank you to Toby for helping you guys out. Yeah, he is a legend.
Imagine. Toby's the only person that we've jumped onto trading with and actually stayed with it.
Yeah.
Out of all the people that we've spoken to about trading, jumped on and invested our time into, Toby's the only person who's still around.
And they know how grateful I am for that. Like there was a period I remember I was like kind of getting sick. Like I was getting sick of saying thank you so much. You remember?
You don't stop saying thank you. Like, we appreciate all the thank yous. What it shows us is that, you know, you guys are appreciating what we're doing, and you know it does work both ways, because it keeps us, you know, motivated. Mm-hmm. Yeah, Toby is a brother, man. He is literally part of the crew. Yeah, thank you as well to all the members. Thank you for, trusting in us, trusting the information that we hear, that you're hearing, and, you know, trusting yourselves to kind of, you know, put that information to use. I promise you now, like, this information you're seeing in front of you, it will change, it can change your life. Like, we already have members that, you know, have told us this, so thank you. Support, yeah, exactly. And don't forget, trading's an individual game, so make sure you're focused on your own progression. It's great you can help other people, but make sure that you're also progressing the way you need to, and you're, you know, being an example to others. Yes, we appreciate you all. Alright then, so we've got an amazing week ahead of us. I've been away for the weekend, so I've been away on the markets today, but I'm looking forward to getting stuck straight back in. This is what I love. And thanks for Burton for holding down NGAT while I was gone. Yes. Any last words, Burton?
No, that's it. Thank you as always, guys. Literally, thank you. gonna see some great levels in 2021. All of us.
Yeah, definitely.
Oh my god, bro! I can't wait. Like for real, everyone in this group is gonna be.
It's already started as well. That's what's crazy.
Yeah.
Already started.
For real.
Thanks for the playlist. I know you don't like that playlist, fam. Can pretend you do.
You can pretend.
We know your sort of music.
Yeah. All right, fam. Yo, I'm hopping off.
Yeah, likewise.
I'll catch you tomorrow, and everyone have a nice week. Thank you for coming, and well, we keep in touch.
Catch you later, people. Have a good night. Right.